Good morning, good afternoon, good evening, wherever you may be. This is Sid from Elliott Wave Plus, and this is the April 13 of 2023 edition of my quarterly premium plan webinar, where I go over all aspects of our premium plan, which really includes everything that we do here. So it'll be an all-inclusive, kind of showing all the things that we do, and we'll look at quite a bit of current analysis on a number of things, and I'll leave time for questions along the way. Before we get started, I would like for you to be aware of my disclaimer. It's at my website, elliottwaveplus.com. And to see the disclaimer and read it in full, you need to go to any page on my site, scroll all the way to the bottom, and click on this Terms of Service Disclaimer tab. And there it is. It's there all the time. If I were to summarize this in one sentence, it would be, there's risk of loss in all trading. I'll be using the website quite a bit during the webinar and showing you how to get around there. But let me ask a question. And one of the things I was trying to prepare, and I goofed it up and I didn't have it ready. It was a quick poll. And that is, if you were going to invest all of your money today with just a 30-day time horizon, so you're going to invest it all in one thing, and take it out in 30 days, hopefully, and have a nice profit. What item would it be? I would suggest some possible answers, and that would be the S&P, number one. Number two, gold. Number three, Bitcoin. So of those three right now, I've gotten a number of long the S&P answers, and I've got one long gold miners, like the GDX, or if you want leverage, one of the leveraged ETFs on miners. I'm getting a Bitcoin. Anybody else want to chime in? Anybody else want to chime in? Anybody saying gold? The Russell, I think, is one of the answers. The Russell index, more Bitcoin. Anyway, well, I'm going to try to provide some answers and some clues as to what maybe would be the best shot over the next little bit, because we're starting to see a bit of extremes. Yeah, cash is an answer, or short the stock market. It might be an answer you might give there as well. So that's very interesting, and I've noticed that the answers are all over the map, and I think that's pretty interesting, and I think that indicates that there's a lot of indecision in what the heck is going on right now. And so we're going to try to clear up some of those things as we move along. But I would have to say most of the answers were long the stock market. And I just wonder if you would have had those same answers yesterday after the close as today after the close, because it was a big update. Here's a crude oil money market fund. Very interesting. So anyway, let me go through the website real quick for you. I'm logged in, and I'm logged in as a premium plan subscriber. So I have all of the premium plan nightly algo reports available to me, the daily trend reports, the webinars, and the screenshots. So what we're going to do is we're just going to start with the first the cheapest plan, the daily trend reports plus cryptos. So this is something that everybody gets at my website, no matter what plan you're on. You can be on any of the 4 plans. The $25 a month plan, the $75 a month plan, the $100 plan, or the $200 plan, and they all get this. And so what the daily trend report provides is a kind of a basic indicator-based screenshot every night of these items, and it shows basically what the daily trend direction is. And then it also shows some algo signals on some cryptos and my Elliott Wave count on Bitcoin. On the $25 plan, the only Elliott Wave that you get there is on Bitcoin. So let's take a peek very quickly at tonight's daily trend report, and just so you can see an example of it. And so notice I clicked on nightly reports, daily trend reports, and now each night there's 2 folders in there, the crypto charts and the trend charts. And so very quickly, I'll show you a trend chart. And show you a whole bunch of trend charts, but let's look at the S&P trend. So the daily trend direction on the S&P has been up since March 27. I'm going to go back. I'm going to just start with the Australian dollar. The Australian dollar has been chopping sideways, but may, after today, I think you'd have to say it's in an uptrend. The US dollar, Canadian dollars in a downtrend. And by the way, so you can see all these charts, I'm going to turn the video off of myself. There we go. So US dollar in a downtrend versus the Canadian dollar. It's in an crude oil is in an uptrend. And there's just a few indicators that I use on these charts. One is the green buy zone boxes and red sell zone boxes. Those are created by essentially where price is in relationship with this moving average, which is Perry Kaufman's adaptive moving average. And then there's one other moving average on here. It's sort of a moving average. It's called the ATR volatility stop. And then the ADX indicator is down here. Okay, and so there's basically 3 things going on here. And it just gives you just a basic idea. The Dow Jones Industrial Average has been in an uptrend since March 29. The Euro, an uptrend since March 20. GDX, uptrend since March 13. One thing I will note on this chart is the GDX now has a little brown box around today's candle. That means that the ADX indicator on a daily chart has reached above 60, and that is rarefied air, and generally means that the trend is overextended, and be prepared for a pullback. Gold has been in an uptrend since March 10. Banking officially in a downtrend. However, you'll notice that the ATR volatility stop has dropped down below price. That is a sign, an early sign of a trend change pretty often. And notice that it has been a couple of weeks really since the banking bottomed. Since the bank's bottom, it's trying to put in a little base and possibly break out. If it closes tomorrow up above this adaptive moving average, we could have a new uptrend on banking. Nat gas has been getting pummeled, but the adaptive moving average has dropped down below price, which means it's expecting a rather imminent swing low. NASDAQ has been in an uptrend since March 15, so on and so forth. Russell is trying to get established with a new uptrend. Silver has been in a massive uptrend since March 13, and it also, for several days now, has the ADX indicator has been above 60. So it is, the trend is would have to be considered overextended here. We'll talk more about that here during the webinar. So there's the S&P in an uptrend since March 27. Bonds are in an uptrend since March 10. US dollar in a downtrend. since March 17, XLE, large cap oil stocks in an uptrend since March 29. So there's the whole group of trend. So you get those every night. Every paying subscriber gets those. And then we'll go back here and we'll look at the crypto charts. And the crypto charts include my daily and weekly, usually, Elliott Wave, yes, where I combine Elliott Wave and Hurst. And then it also has Algo signals on Bitcoin, Ethereum, LiteCoin, and Ripple. So let's put that our website aside here, and let's go ahead and bring up Trade Navigator. And I'll look at the Bitcoin charts using live charts. So the trend on Bitcoin, obviously up, and it's been up since March 12. And notice that the trend following template is not really warning of any trouble up here as far as a top or an imminent swing high. But when we go to the algo, all of a sudden some problems start showing themselves. And so the algos, all of the algos, and most of the algos screenshots we show are for premium plan subscribers. That's the $200 a month program, and that's on a lot more than just cryptos. But we do offer a few automated trade signals on cryptos. And this is where I use a proprietary momentum algo that I wrote, and I optimize the indicators once every quarter, and I just finished that. And I optimize it to the last 3 years running of data. So it's currently on a buy signal from April 9, but when we look at these algos, you can see that had these settings been in place during the last 3 years, then this is showing where the winning trades would have been and where the losing trades would have been. So the big green boxes are the winning trades. The thinner, smaller, dark red boxes are the losing trades. So ever since that low back in mid-March, it caught a massive winner, this algo did. But then it got stopped out here with a small loss, and now it's currently in a winning trade, and it's still in a trade. It shows you where the stop is. And so every night, the crypto plan people see these automated trade signals. Now, what these are designed to do is to sniff out momentum, and if there's enough momentum, it either goes long or goes short, depending on the direction of the momentum, and it waits until there's a measurable loss of momentum, and that is shown by these red blocks, which come from the Walter Bressert, what I call the Walter Bressert indicator, which is a double smooth RSI and a moving average of it. And I back test for the moving average. This happens to be a 21-day moving average of the Walter Bressert. And so when the Walter Bressert is on a positive crossover, and the slope of the adaptive moving average turns green, if they are in agreement, that is a new buy signal. It says buy at the open of the following candle. And then it waits, it'll stay with the trade until it gets a Walter Bressert crossover. That's that red blob. So that was a great trade right there. It stuck with it and was a huge winner. Now, sometimes, like here was, here was a short trade, and that you can't hardly see it there, but there's a Walter Bressert right there, a green one that said get out. It's there's a loss of downward momentum, and that was a losing trade. Like here was a sell right here, sell signal, got short at the open of that candle, the following candle after the sell signal, and it stuck with the trade until it got a Walter Bresser, and that was a big winner on a short. So you can see the winners are allowed to run, but the losers are not. There's a fixed stop at the beginning of the trade, and this particular one does not utilize a trailing stop. But the thing I wanted to point out on this chart is, yes, the Walter Bresser and the adaptive moving average, the slope of it, those are used in deciding when to go long and when to exit and when to go short. But there's an additional indicator or two on here. One is synthetic retail sentiment, which is quite bullish right now. And then this one I find very important. This is the money flow versus RSI. So this is an indicator I put together. The black line is the RSI indicator, standard RSI, and the blue line is the money flow indicator, which is a standard RSI that is weighted by volume. And I have some automated colors come up when there is a current situation involving the relationship between those two indicators. For instance, right here, the money flow, the blue indicator, was well into overbought territory. And riding during this, third wave 3 of 3 to the upside above the RSI. But then as it started to lose momentum, the volume started coming out of it, and it started putting together these dark red zones and a pink zone. In any time after you've seen some dark red and then a pink and then nothing, that means that the extreme situation is over, and you'll notice that was followed by downward movement. Same thing here. We got into some extremes up in here, but the money flow stayed up. It stayed up. It was basically suggesting, no, this isn't as high as Bitcoin is going to go. But now on Bitcoin, we have the money flow indicator below the RSI, and the RSI is in its overbought territory, which is above 70. In order for the money flow indicator to be in overbought territory, it needs to be above 80. But it is, notice that the RSI is overbought, and the money flow is below it. That is trouble. So this is saying, oh, hey, what's going on here? Be very careful. This may be putting in some sort of swing high. So that being said, next thing I'm going to show you is how I, on Bitcoin, combine Hurst and Elliott Wave. So this is all the Bitcoin data I have, which actually goes back to December of 2017. And it figures out where the peaks and troughs are. And in the Hurst system, at least on this particular chart, we kind of get it back into position. The yellow diamonds indicate an 18-month cycle trough. And then this is an 18-month cycle. And so there was an 18-month cycle trough on June 22 of 2021. And then the next 18-month cycle trough was on November 9 of 2022. That was the most recent important low on Bitcoin. And within each 18-month cycle, there are two 40-week cycles. Notice that they aren't perfectly even. And then within each 40 40-week cycle, there are two 20-week cycles. And within each 20-week cycle are two 80-day cycles, so on and so forth. And so on Bitcoin, I use that Hurst system on both the troughs and the peaks. So the last 18-month cycle peak officially on Bitcoin was in November of 2021. And the next one is due essentially now. There was a 40-week cycle in there's two 40-week cycles inside of each 18-month cycle. So if this 18-month peak cycle were the same duration as the average of the last 6 18-month peak cycles, it would have topped in mid-February. However, because there are two 40-week cycles, there is a nest of cycle peaks up here. And so a 40-week cycle peak was due in approximately early April. So this is what we call a nest. There's a nest up here. So what is, and then this orange line is something called the composite line. And the composite line, as you can see, is bearish from essentially now all the way through March of 2024 on Bitcoin. And then it is bullish up into approximately August of 2024, the next 18-month cycle peak. So what I do when I marry Hurst and Elliott Wave together, I come up with roadmaps where they both are in agreement. So here's what I think, here's my long-term count on Bitcoin. And I think that the peak in November of 2021 was very likely a very, very important peak. There's a couple of reasons why from an Elliott Wave perspective. One is that I think that we finished a 3-4-3-4-5 up into November 2021, and all of the subdivisions are there to call a completed, very large degree 5-way move to the upside. Then then the next thing that happened from November 2021 through November 2022 was a very clear 5-wave down structure. So this means that in Bitcoin, at least, I think we have a new trend starting in November 2021, and that trend direction long-term is down. And then now recently, we've got a 5-wave up structure that I think is finishing right about now. And therefore, I've got that as a wave A of an eventual A, B, C. And now you can start to see how I take the roadmap on the composite line and build it into my wave count of an A, first an A, downward movement into a 40-week cycle trough nest due in July is the very next thing that's expected. Then some sideways movement, and eventually in approximately March of 2024, and a move up. So there's the move down into July, a triangle through all the way to March, and then a move up into June of 2024. So why am I so bearish after that? Well, the composite line on Bitcoin doesn't really offer a whole lot past that of information, but from an Elliott Wave perspective, I'm expecting that this was a 5-wave down structure, and now we're going to get a 5-3-5 corrective structure, and then we'll get more down, because I think this was a very significant and large degree top followed by a 5-wave down structure. So I've taken Elliott Wave and Hurst and married them together. Here's the that was the weekly chart. Here's the daily. So the daily is bearish down through July, and that would be a 40-week cycle trough. Okay. Inside of each 40-week cycle trough. So this is a downward movement into a 40-week cycle trough. On the way down, there's an 80-day cycle trough due approximately in mid-May. So this is suggesting an ABC to the downside there. So there's the mid-May 80-day cycle trough, a little move up into early June, and then on down through July 22. So if my roadmap turns out to be correct on Bitcoin, we have completed a 5-wave up structure and expecting downward movement out of an 18-month cycle trough next, all the way down into the next 40-week cycle trough, which is due in approximately July, mid-July. So that answers, at least if you're following my work and you believe that this is going to work out like this, this is not suggesting that Bitcoin is going to be the place to be over the next 30 days. Matter of fact, the next really sustainable buying opportunity, if this turns out to be a correct roadmap, would come in mid-July. So that's how I marry Elliott Wave and Hurst on everything that I do, And this also shows how you can, as a trend plan person, you can look at not only the trend charts, but you can look at at least the algo charts on 4 cryptos, look for some additional clues, for instance, the lagging money flow indicator right now, which is spelling a little bit of trouble, and then move into the weekly and daily Bitcoin chart. So that's the trend plan. So I'm going to bring back the website. We're going to move to the next plan. And notice that we've already talked about some of the things that I do in the premium plan, which is the algos. And but the premium plan is a lot more than that. It also includes sentiment and seasonality. But the next rung up is at $70 a month is called EWP ScreenShots. So what EWP ScreenShots is, and it's called the basic plan, is includes screenshots of a number of items that include my Elliott Wave and Hurst cycles analysis. And those items include lots of stock market items, lots of ETFs. I list a few of the basic things that I promise here, but I include way more than that. So the basic plan is $70 a month, and basic plan subscribers also get the trend plan reports. So let's look at the screenshots and real quick. And so there's screenshots. And let's just take a quick peek at tonight's edition, or actually this would be yesterday night's edition. And you can see that you've got like on Wednesdays, a couple of bonds screenshots. On Sundays, there's more like 5. And then on Wednesdays, you get copper, crude oil, gold, natural gas, palladium, platinum, and silver on commodities. You also get Bitcoin, my Elliott Wave on that. Currencies, you get the Australian dollar, the US dollar index, euro, pound, Canadian, Swiss franc, and USD JPY. I include some individual stocks on Wednesdays and Sundays. On Sundays, editions of screenshots, usually quite a few more individual stocks, but Apple, Amazon, and some others. Usually Google, Microsoft on Sundays. And on sectors, this is a Wednesday edition, so GDX, banking, KBE, the VIX, XLE, large cap oil, and others. That also includes quite a few more on a Sunday. So those are the screenshots, and they include like this is yesterday evening's S&P screenshot, and you can see it's generally bullish up into mid-May from here in mid-April. So mid-April through mid-May, it's bullish on both the main and the alternate account. Now, I'm going to show some more of this from a live chart here in a minute, but I thought I'd take this opportunity to go back, and the last major swing low was in mid-March. So let's go back and look and see. Let's look at the March 12 edition of EWP ScreenShots. And let's take a look at what my call was for the S&P at that time. It was bullish, and it was bullish essentially through mid-May on both the main and the alternate account. So it's expecting a 20-week cycle trough somewhere March 9 through March 12. And on this date, on the 12th, I thought the bottom was probably in. So let's go to a live chart now on the S&P. We'll take a few seconds for that to bring up that series of charts. So you can see that from that low right there, that was on March 13. So the screenshot I just showed you was on March 12. March 12. I was expecting an imminent low there and then a rally. And I was calling this a green 1 and a finished green 2, and we would be involved with the move to the upside. Notice that that is still my main count, and that I think that we're likely in a bullish 1-2, 1-2 and on up. Martin asks if you have a wave 4 retracement exceeding 0.618, but hasn't closed into wave 1 territory. Do you place less? Well, okay. I can see what you're probably asking about, and that is on my long-term count up from the March of 2020 low. Martin, are you saying this seems like an awfully large wave for a wave 4? And yes, it seems rather large, but it did not move into the price territory of wave 1. And therefore it was not invalidated. And does that mean that it's less likely? It's always in the back of my mind that that might have been too big for a wave 4, even though that's my main count. I assume, Martin, could you answer my question? Is that your concern, that me labeling that on the S&P a wave 4? And for those folks, I have an alternate count, and that is that up from the March of 2020 low, we're getting an ending contracting diagonal, and that the initial wave up was an A, B, C for a wave 1. So each leg of a diagonal is an A, B, C zigzag. And then I've got this as an A, B, C down here for wave 2. Now, one of the problems with this count is usually in a diagonal. Wave 2 will retrace wave 1 much deeper than that. Notice that this count is bullish up through mid-May. I have the exact same Hurst dates on this count as I have on my main and first alternate. I'm calling this alternate count number 2. So yeah, I try to think of that sort of thing. Sid just asking that Hurst had April 12 for a short-term top and April 29 as a low. Do you think that's still the same? No, the Hurst that I did yesterday is bullish from approximately April 17. So admittedly, that is, let's see, 14, Monday. But it sure looks like it's going to go ahead and take off now. Bullish from April 17 through April 28. A pullback only through May 4. And then more upside peaking around May 11. So that's what Hurst is calling for. And then a move down from mid-May to mid-July. That should be, and it's going to be very interesting to see, you know, what kind of move we see to the downside at that time. I'm keeping account, the alternate count here that suggests that no, we're not going to see any more new all-time highs in the stock market. And we're going to peak in mid-May around 46.22 and then get a 5-wave down structure down through mid-July, a corrective move up for wave 2 into September and so on and so forth. So I've got a main and an alternate. They move in harmony with the Hurst analysis, both of them. And so one would be kind of my version of Prechter's count, except my version, it moves in harmony with Hurst. And I assume Prechter is still thinking that the high that occurred in January of 2022 will not see any more new highs above that. That's an assumption I'm making. And so I'm not a current subscriber to his stuff. So it's all just a matter of, can this market really go up into mid-May, or will it be weak? That is the question. But this is the reason that I went to back to show you that I was calling for a 20-week cycle trough within 1 day of when it really occurred here. At least, you know, as we're nearing that low, showed you that old screenshot from 1 day prior to the low, and then it was a bullish into mid-May. So that roadmap really hasn't changed. But here's the thing about Hurst is it does not determine how far something's going to go during that span. What it suggests, what this composite line suggests in Hurst is direction. It doesn't suggest amplitude. In other words, it's not saying how far down this is going to go. For that, I go to my long-term Elliott Wave count, build, and then move that into an intermediate term and then a shorter term Elliott Wave count, and then look at Fibonacci's. And that's where I come up with these targets. But usually, I will have to say, we're going on for quite a while now, Hurst gets the direction right. What I'm not convinced about is how far it's going to be able to go until mid-May. And that's why, for me in my personal trading, I don't use options. I don't use options because you can get, if you get a real weak move to the upside through May, you may make nothing in a call, owning a call, because the time decay kills you. I would much rather use either a non-leveraged item or a leveraged ETF or a futures contract, something where there is no time decay of any huge substance. Now, there is some time decay that comes into leveraged ETFs, but not a lot. There is some there. But anyway, so this is calling for upward movement, and it's been working. And it looks like it's just about, the S&P, about to break above its high back here in early February, and it already has broken again above the high back in mid or late October. So there's really no such thing as a triple top, and so I think this thing keeps going. And that's been my wave count for a long time. Like, here's the Dow up into mid-May is the main count. And you'll have to admit, in the Dow, there's no way to count this downward movement as a 1-2, 1-2. It started with a three-wave structure back here for one thing, and it just really looks rather corrective. And now this looks very strong to the upside. So I think it's going to keep going up through mid-May, and we'll see. My main count has it making new all-time highs by then. So anyway, I was showing you the basic plan, and its basic plan gets into these Elliott Wave counts where Mary, Elliott Wave, and Hurst. Very quickly, I would like for you to also be aware of the next plan over, which is the Pro plan, and the Pro plan gets you an additional thing beyond screenshots on Wednesdays and Sundays, and beyond the nightly trend charts. It gets you a weekly webinar. And in the weekly webinar, that's usually about 2.5 hours long, and it's it covers a ton of stuff. Lots of stock indices, ETFs, sectors, also some stock markets around the globe, bonds, commodities, currencies, and Bitcoin. And for that, that's by far and away my most popular plan. It's $100 a month. And so that, when you are a Pro plan subscriber, that opens up the webinars tab, and you can see what's in the webinars tab. So here's the webinar from Sunday. Sunday, the 8th. Actually, I did this one on Saturday because of Easter Sunday being on the 9th. And so initially we put up a full recording of the webinar. And it's just the Zoom recording. And so I'll hit play on that, and it'll start playing. Maybe anyway, I might have too much stuff going on, but anyway, then about an hour after that, we post the full Zoom recording of it. We also post a version of it where we put chapters on my coverage. So after the fact, you can go back and look at, let's say you're interested in bonds. So that jumped very quickly to my bonds coverage. This all of a sudden a jump to crude oil, currencies, it jumps, et cetera, et cetera. So you can jump very quickly on the timeline to these different chapters along here. And if you don't have time to try to find where my coverage was during that 2.5 hour period of time. So that's the webinars. And then finally, we have the premium plan. And here, there's the premium plan brings in 3 additional very important items. One thing is premium plan members get a nightly report, and that report includes screenshots of all of our algos, and then it has our algos that also includes screenshots of sentiment conditions on all of our covered items. And then on the sentiment conditions screenshot, it includes seasonality. So on premium plan, it gets momentum algo signals, sentiment, which I think most premium plan members feel that that's the most important item that they receive on a nightly basis, and I'll show that to you. And the sentiment screenshots include seasonality. So the premium plan is $200 a month. And by the way, if you are a first-time subscriber, you never subscribed before, I will give you a 50% refund on your first month, no matter which plan you choose. So if you have never subscribed before and you'd like to try out my service, use this Contact Us tab. This is at the bottom of every page on the site. And just send me a quick note. Hey, Sid, I'd like a 50% refund on my first month. My name is such and such, and I plan on subscribing to the premium plan. Just wanted to let you know. And then I will send you an email back saying, yeah, go ahead. I'll be looking for your subscription, and I will refund 50% of it back if you are, in fact, a first-time subscriber. So, nightly reports people, the premium plan people, if you're a premium plan subscriber, you can click on there and you see our nightly report. So here's our nightly report tonight. And what the nightly report is a spreadsheet that we turn into a PDF that shows any new signals that came in that from the momentum algos on about 20 different items: the Dow Jones Industrial Average, S&P. So that this would be actually the YM contract, the ES contract, and 2 leveraged ETFs on the S&P, 2 times bullish and a 2 times bearish. The NASDAQ, the NQ contract, and 2 different ETFs on the NASDAQ, a 2 times bullish and a 2 times bearish. The Russell via the RTY futures contract, and 2 different ETFs on the Russell, a 2 times bullish and a 2 times bearish. The energy sector, XLE, financial sector, KBE, gold miners, GDX, the German DAX, emerging markets, EEM, bonds. I'd use the ZB contract of 30-year bonds, crude oil, gold, silver, US dollar index, Canadian dollar via the USD CAD currency pair, Euro USD currency pair, Australian dollar US dollar currency pair. Notice there's some buy signals. If there's a new buy signal, it's green. The buy signal on gold and crude oil tonight. A buy signal on gold miners. And also on this last column over here, it will show you what the DSI is, and that means the daily sentiment index. So right now, 70% of traders are bullish. Retail traders, 70% of retail traders are bullish on the German DAX. 70% are bullish on bonds. 51% are bullish on crude oil. 83% are bullish on gold, 87% are bullish on silver. We're going to talk about this in a second. Only 22% are bullish on the US dollar, so on and so forth. Those numbers are important, especially if they are extreme levels. So I'm looking through, like the S&P, the ES contract, only 50%, even though today was a big up day in the markets, only 50% of retail traders are bullish. That's interesting. What that is telling me is there's a lot of people that don't believe, even though the stock market bottomed in mid-October, and we are over 6 months past the low, there's still only 50% of retail traders that are bullish. This is interesting. There's there's at Seeking Alpha, there's a author there that I really like, Michael James McDonald, and he's all about sentiment, and he talks about this very thing, and what appears to be happening is the S&P is climbing a wall of worry that retail traders still don't believe in it. And that setup is generally predicts more upside until they do start, getting heavily long and getting with it, but they still aren't heavily long. So what of all the items I just showed you here, what items had the highest DSIs? Well, you can just scan down and see. Well, it's silver. So 87% of retail traders are bullish currently on silver. So anytime you get up that high, it's a warning. And we're going to look at how we take that sort of information and show it to you. So I'm going to look at gold first. So tonight's gold screenshot, we're going to look at two things. We're going to look at the screenshot of the Algo on gold, and it gave a limit buy. So what does a limit buy mean? I've gotten this question from subscribers before. What's a limit buy? That means that the signal candle was longer than normal. And so I back test to determine what is a longer than normal signal candle. Like this was one right here. And then I also backtest that if the signal candle was longer than normal, how much of a pullback should we wait for before getting long? And in the case of gold, and it's hard to read here, but it doesn't look like it waits for much of a pullback. 6 ticks is all on long positions on gold. So instead of buying right at the open of the following futures candle, it waits for a 6-tick pullback, puts in the order to buy there. What about going short? Well, going short, if the signal candle, like here's a short signal candle that was longer than normal. It's the way we can tell, it's got that little circle above it. And so in that case, it waited for a 53-tick pullback. This is based on backtesting before going short, and that worked out because it ended up having enough room to make a profitable trade. Notice on gold how many big giant winners there are on the gold algo. As a matter of fact, this I'm going to bring over a spreadsheet, and we'll post this spreadsheet for you to download. We're going to post the recording of this webinar, and we're also going to put a link so you can download this Excel sheet. And this is a sortable sheet. And what I've got it sorted by right now is a 3-year return on investment. So in the case of gold, the account size required to trade the signals on gold is 20,182. Why would it require an account size that big? Well, because it needs to have enough money in there to withstand the occasional string of losses, which are inevitable on every algo. So was up to 4 at one point during the last 3 years, had the settings that we currently have on the gold algo been in place for the last 3 years. At some point, there was 4 consecutive losses. 4 was also the maximum number, was the most consecutive wins. The worst drawdown that occurred during that 3-year period was about $7,500. Now, when trading a full-size gold contract, that requires a $1,600 stop, and that's both for longs and shorts. That's on trading one contract at a time. Now, you might say, wow, that is a huge stop, but we're trading off of daily charts here. There are 4 items on this list that allowed you to trade micro E-minis, which are 1/10 the size. In that case, you'd only be risking $160 if trading one micro E-mini on gold. You only be risking $160 on each trade. That would be the size of the initial stop, but both on longs and shorts. So, but trading a full-size contract one at a time, this theoretically would have taken a $20,000 account and added $113,000 worth of profit over 3 years. Obviously, if a person was growing their account that quickly, they would probably gradually trade more contracts, but we don't figure that in to our back tests. And it did that only winning about 50% of the time. Matter of fact, slightly less than 50% of the time, 47%. But the average winner was $4,563, and the average loser was $1,474. Now, you might look at that and go, well, if you got a $1,600 stop, how can your average loser be $1,474? And the reason is that, remember, what the algo does, it sticks with the trade until it gets a loss of measurable momentum. Well, sometimes it'll get that loss of measurable momentum fairly quickly. Like right here, it suggested getting long, it put in the stop, but by the time it got over here, it had been in this little sideways routine, and it said, nah, this doesn't look good, get out. Why? Because the Walter Bretzer crossed below its moving average down here and put up this red block, said get out, and it was a very small winner. Sometimes those are small losers, like right here. This is probably not a full-sized $1,600 loss. It was probably something a little smaller than that. But look at these winners: winner, 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 loser, winner, probably a little loser here, another loser. It's on 2 small losers now in a row, and now it's giving a limit buy. So the algo is going to continue to press, because that's what momentum algos do, for higher highs in gold. This is the reason I give you this indicator on the algo screenshots. It's very important. This is the money flow versus RSI. Notice that the blue money flow is riding below the RSI, and it crossed over below the black RSI way back here. And for this, I think I'd like to go to a live chart. So let's go to the gold and silver charts here. And I'll be able to show you that our screenshots that we provide each night, already showed you some of them are of the algos. Some are of the algos. Like here's the algo. And it's got a new limit buy. It looks like it's already filled the position. So all it looks for is a 6-tick pullback. But it also shows you down here when the money flow is lagging the RSI, and that we got a crossover back here. And to be frank, gold, ever since this top tick that occurred on Wednesday of last week, gold is really just barely above that. So that top tick that occurred on Wednesday of last week, that's a whole week ago, was at 2049.20, and gold is at 2056. So yes, there's a measurable loss, potential loss of momentum here, and you'll notice that the money flow is lagging the RSI, and so this allows premium plan members to sometimes just decide not to take a trade. Look at this trade right here. So this signal came in here. It was a longer than normal candle. It waited for a 6-tick pullback, and it got long. And we're going to go down here. We're going to look at what things look like down here. Would that have been a better trading opportunity? Yes, I think so, because both the RSI and the money flow indicator were both sloping aggressively to the upside. And then pretty soon, right here, the money flow overtook the RSI to the upside. And many times that suggests upside continuation. And yes, there was upside continuation. But right now, it's looking rather iffy. So what else can we look at that would help us decide whether this buy signal would be a good one to take that would just hit the report? Well, it would be the sentiment screenshot. So once again, I'm going to go to tonight's edition, and we're going to go to gold sentiment. So there's the screenshot of gold sentiment that was, and we'll just so we'll see it a lot larger, I'm going to go to the live chart on it. So I don't know if some of you are going to be premium plan members active, and others might have been in webinars before, but there are several huge red flags as far as expecting much further upside right now in gold. One is that the commercials are heavily short. They're short. They got short first on this quickest acting commercials indicator. The commercials is a % of open interest. That's a Larry Williams idea that I programmed into an indicator here. That was the first problem sign. The second is that the commercials are now as heavily short as they have been at any point in the last 6 months. And they just now reached as heavily short as they have been at any time in the last year. That's what this pink zone is here. So the commercials are heavily short. So who are the commercials? Well, in mining, it's real easy. The commercials are the mining companies. They are the producers. And what those guys do is when prices are pretty high, let's say overbought, they will hedge. They will bet against the price of gold. Why do they do that? Well, it's to protect them from any kind of big downward movement in the price of gold. If they start moving down, then they're incredibly huge hedging accounts, which is what all producers have, will profit during a period where their gold is moving down in price. And so it softens the blow of the price of gold moving down. So what else is a trouble here? Well, we talked about this number right here. There's 83% of retail traders that are currently bullish. And that number recently was as high as an 85 and an 86. So there's some trouble signs suggesting that this upward thing in gold is pretty long in the tooth on the short term. Notice that back here in late February, the downtrend was overextended. We got one of these brown zones. That means the ADX indicator was over 60 on a daily chart. And when you get those, this kind of shows, it may not tell you the exact tick at the bottom, but it's a definite warning that you're way overstretched. In this case, you were overstretched to the downside. In this case, you're way overstretched to the upside. So do I consider, when I build my Elliott Wave counts on gold, do I consider Hurst? Yes. Internal wave structures in Elliott Wave? Yes. The Fibonacci targets associated with the count? Yes. But I also consider sentiment. And I just think that it's unlikely that gold is going to continue to the upside unabated without some kind of pullback, because the sentiment conditions are suggesting that we're at or very near a swing high where everything is just overdone to the upside. Now, that information has benefited me many times. And to show that, and it's been of major benefit on hang on here. I'm going to go to my Microsoft OneDrive where I store all of my history. And I'm going to go all the way back to March 9 of 2022. Oh, plenty past it. March 9 of 2022. So on March 9 of 2022, here was my gold count. I was really probably ought to look back to slightly before that. How about March 6th? Gold. Yeah, I want the daily. Yeah, Hurst was expecting a major peak in gold in mid-March and then a decline into August. I'm going to go back to that March 9. I'm just going to look at the daily chart. Come on. There it is. Okay. Was expecting an imminent peak up around 2085. for an 18-month cycle peak and looking for a massive decline down into August of 2022. So here's what happened. Go to the weekly chart on gold. That was in mid-March right here, and a massive decline down into approximately August at the time. So here's the same thing on a daily. So the top tick day ended up being March 9 and moved down into August. So this is more like August right here. And so it managed to kind of get down there and then put in a bottoming pattern for just a little bit longer. But you can see how accurate Hurst was at that time. So admittedly, on gold, I'm looking for a pullback. And one of the reasons is the sentiment. And yeah, I know it's not much of a pullback because the Hurst continues to be bullish on it, really all the way to the end of the year. And this really hasn't changed. My wave count hasn't changed that much on this. So how about this low that occurred back in November of last year? So we'll look for November of 2022. Look for something in early November. See if it was able to call that low. Here we go. So here's commodities. Gold daily. So at that point, it had been moving down aggressively. And I was expecting an 18-month cycle trough, essentially, and a move up through initially out of that low up through the end of 2022. Well, as you can see, it did put in that 18-month cycle trough there in like the next day, and then rallied initially up through year end and kind of kept going. But that was an important juncture right there. And if you look at where sentiment was at that time, that's in November. There was a couple, like on November 4, there was a bullish sign. Commercials were all heavily long. Retail was at a 15 DSI and just off of 11. Perfect bullish storm that came in on November 4, and that was supporting the idea. So Steve says, is it time to call this a wave 1 of 3 instead of a B wave? Yeah, I've done that, Steve. I've done that. You notice that. And here, did anybody else see anything else on this daily roadmap? So I already showed you on the gold sentiment that commercials are all heavily short, retail is heavily long. And so did anybody see any other thing that looks like trouble for gold on the short term on this chart? Well, the answer is the money flow. The money flow index has dropped down below the RSI recently on daily chart. That's the same thing that the nightly algo is showing us. So what about silver? Is silver in the same predicament? Almost. The commercials are heavily short on the short term and then nearly heavily short on 6-month look back, nearly heavily short on a 1-year look back. And the DSI was recently in 91. Also on silver, unlike gold, it's gotten so, it's pushed so aggressively higher that the ADX indicator is over 60 on a daily chart. That's why we're getting this brown zone here. Another warning sign. Does anybody see anything else troubling that's shown on the silver chart? The answer is we just entered into a period of bearish seasonality for silver, and it lasts all the way through May. Maybe, Steve. Maybe here's the problem that I think might happen with GDX is that going back to the stock market real quick as a reminder, looking for a peak in mid-May and then a pullback in the stock market all the way to mid-July. I'm going to go back to the S&P chart to show you that as a reminder. And that's based on Hurst. So there's a 40-week cycle trough due in July. So looking for a peak in mid-May in the stock market and a pullback into mid-July. That pullback, I'm based on my wave count, it could be just a wave 4, but it could be something more aggressive. And sometimes GDX moves with gold, and sometimes it moves with the stock market. And so there's a period of bearishness expected between mid-May and mid-July on the stock market. And it's interesting when we go to a GDX and look at that the picture is a lot more bearish on GDX because of Hurst. There's the daily chart on GDX. It basically has reached where wave B here would be 1.382 times this move down as a wave A. And Hurst is bearish from April 12 on the GDX, not just down into late April, but quite a bit further all the way into June. That's just the difference between those wave counts is just going to have to work itself out. But between mid-May and mid-July, that is a bearish period for the stock market, and that could affect GDX. And I would imagine one of these roadmaps, the GDX or the gold, will have to be revised at some point. And so why do you think, let me ask you, why do you think gold and silver have been rallying so aggressively since approximately March 8th? Anybody want to suggest a reason why? Excellent. I was waiting for that, Steve. Fear of bank failure. So March 8, as I recall, March 8 or 9, was that run on the bank. And that was the very day that gold and the gold miners, March 9, actually started rallying in this virtual straight line to the upside. So that was March 9. So fear of bank failures. Okay, I'm gonna say that I think fear of bank failures cannot be the reason. It cannot be the reason. And the reason is because within a few days of that low, the regular stock market was started rallying too. And it's been up ever since approximately March 15th. So why is the stock market rallying? It bottomed on March 13th. It's not showing any fear of bank failures. It's the dollar. That is the reason. It's not the fear of, it might have initially been the fear of bank failures, but that is not turning out to, that cannot be the reason why. It's all got to be the dollar. And I've noticed there's been a tremendous amount of fear mongering from the gold bugs, and they're wanting to talk extensively about the bank failures. But the fact of the matter is, since March 8, the dollar has been heading down. Dollar's been heading down. Would anybody like to see a Hurst analysis on the US dollar? I think it's hugely important. So we'll close the Bitcoin, and on the dollar, DX starting, I go way back, Jan 1971, Hurst nominal model, peaks and troughs, no repents. And so that's a long data set, but I don't think it'll take it too long. It'll bring in the data. It'll start working on it. So this top tick up here, right here, March 8th, that was the day of the bank run or within a day. And so this downward movement on the dollar is coincided perfectly with the upward movement on the gold and silver. That's been going on forever, Steve. Yeah, the dollar is gradually over a period of time going to lose its status as reserve status, but that is going to be a very, very slow turn. And this is one of the reasons why I've been very bearish on the US dollar. I think that we will see the US dollar move much lower over the coming decade. We're going to see it as soon as this finishes this analysis on the Hurst. And so it's, frankly, I was surprised the dollar held up as long as it did. It peaked in late September of last year. But while this is figuring that out, I want to just remind you, the premium plan is about not just about algos, it's about sentiment, and you get these sentiment screenshots that have been amazingly helpful on many, many items. And I think it's also, I don't think I showed it to you, but the commercials are right now all heavily long. I'm just going to set this aside on the US dollar. And you'll notice that I think we're moving down into an 80-day cycle trough, and we're going to move sideways. I think that this initial move down to this is going to turn into a sideways move all the way through August next, possibly put in a triangle. And also notice that the dollar is right exactly at support. It's at that early February low, and an 80-day cycle trough is due. And it doesn't matter if it makes a slight new low or not. As a matter of fact, it probably will, because the market loves to take out stops. The market is in a way, if there's a clump of stops somewhere, it's like a magnet for the market. And so, and I think that it did make an ever so slight new low below that early February low already by a few ticks, and maybe was enough to clear some stops. And then Hurst is bullish until late May. But let me, it's still figuring that the US dollar analysis over here, another monitor. So before we finish, I want to get to the stock market. And when we first started the webinar here, I asked, what would you want to be in as far as investment over the next 30 days? Would it be gold or precious metals or gold mining stocks? Or would it be the regular stock market? Would it be a particular currency or bonds or Bitcoin, and I've already established that I don't think it's Bitcoin and I don't think it's silver or gold. Not on the short term. They're already overdone. I think it's the winner is the stock market, and I'm going to show you here the sentiment. Commercials are all heavily long the stock market right now, and yet retail traders are only up to a 50, and they're only up to a neutral. So there's plenty of upside available. This is so I think what the stock market is doing is exactly what this fellow that I showed you earlier, this Michael James McDonald, talks about. He uses other indicators, is that it's very likely that the stock market is climbing the wall of worry right now. And there's a tremendous percentage, at least half, of retail traders that are still afraid of getting long the stock market. That allows for a lot more upside here, especially when commercials are heavily long. And also at that low back on March 13, so gold bottomed on, I think it was March 9, and the stock market bottomed just 4 days later, and it's been rallying too. So I think it's been a lot more about the US dollar. So there's lots of upside available in the retail sentiment here, whereas there is very little upside left for gold or silver at this time as far as retail sentiment. So here is the US dollar. We can already see that it's marking this low as an 18-month cycle trough low. It's figuring out the peaks right now. It's still working on it. But there's a nest right here, an 80-day cycle trough nest that it's moving down into. The center of the nest is April 17. So I'm still waiting for the peaks to figure and the composite line to come up. So we'll be looking at that in a second. But it seems to me, based on all of the different evidence, that it's in fact the stock market that, if you were going to put money in one single place for the next 30 days, has the best shot of more upside. Also, notice on the S&P, we're in a period of bullish seasonality, and we have been since March 8, and it's working. And that isn't over until April 24. And the same thing on the Dow. We're in a period of bullish seasonality basically toward the end of the month. So this is additional support for more upside on the Dow Jones Industrial Average. Notice that the commercials are all heavily long, and we don't have DSI available on the Dow. It is interesting, and I'll show you real quick, on the NASDAQ and the Russell. The NASDAQ is not, the commercials are not as enamored with the NASDAQ as they have been, as they are in the Dow and the S&P. So when we move to the sentiment on the NASDAQ, commercials really are more on the neutral side on the NASDAQ. They're not as in love with this as they were. Retail is at a 50%. Now, the commercials can change their mind in a hurry. And we really only get that report on I think, Tuesdays. And how about, and the commercials have been pretty heavily bearish on the Russell, except they're all of a sudden waking up to the potential of the upsides very early. So, okay, I think it's the analysis. We'll finish up with this Hurst analysis on the US dollar. Notice that the composite line is bullish on the US dollar out of this 80-day cycle trough up into the next 80-day cycle peak up here. So that would be up through approximately May 23. So We're going to go back to the US dollar real quick, and then, yeah, I can hang out and show crude oil. You'll have to forgive me. I've got seasonal allergies. It's springtime like crazy here. Everything's budding out, and it's kind of driving my nose a little nuts here. So you'll notice that's the reason I've got this sideways idea on the US dollar, and the very next move in the US dollar that is expected is up through March 23. Well, I think that that is more likely to be harmful to the precious metals than it would be the stock market at this juncture. And notice after this sideways jump, which ends about August 28, so over here in August, then it is suggesting a much weaker dollar and I'm having trouble resizing this thing. Much weaker dollar down through approximately 2026, really all the way to the end of the decade, 2029. So that I've seen this, that Hurst was suggesting this very thing for quite some period of time. There we go. So the initial move down, once it gets through with this sideways junk, and that's through August, much weaker dollar. That should be much higher gold through approximately July of 2025. So let's just look. I want to remind you that even though I am on the very short term worried about a pullback on gold and silver, the long-term chart there is bullish. That is bullish. And so I'm going to show that to you real quick, and then I'm going to flip over to crude oil. So I'm a little worried about silver and gold on the short term, but certainly bullish through the end of the year. And I've been mentioning in webinars that I might have to change this account and expect gold to be much, much higher by the time we get into than what I'm showing on this account through 2025 and even beyond. So I may have to get a lot more bullish on this count, but notice that it's generally bullish through year end. But be that as it may, I just had a one of my subscribers unsubscribe because he was pissed that I had this little down arrow right here, and it was showing that based on sentiment we should get some kind of pullback right here. and yet the roadmap is generally bullish, so just goes to show what you get sometimes. Crude oil. So my long-term chart is very bullish on crude oil for a spike up into mid-year, up through July, looking for a spike up through July. And you can see the accumulation showing during this last 6 months on crude oil with the money flow indicator on a weekly chart. Here's the daily. So had this as a triangle, a terminal thrust of a triangle, it's done. Now we're getting a 5-wave up structure. It's getting pretty close to being finished with 5 waves up, in my opinion. I've got a target of 86.99 for the end of 5 waves up on crude oil. And then we should get a pullback through late April. And depending on how big this fifth wave is up, this one, we may only get a pullback back into the neighborhood of the wave 4 1 lesser degree through late in the month. And then lots more aggressive upside. So I think crude oil is put in very likely an 18-month cycle trough, and it's showing us a 5-wave structure. The upside, it's very bullish, but we're nearing the end of 5 waves up. Look for a pullback by around month end, and then more upside. So that's crude oil. Let's see what sentiment is showing us on crude oil. The commercials, all of a sudden, they were very bullish. And so now that they've gotten some upward movement, this is the way commercials trade, is they start fading trends. And so they're starting to fade this. Also, we're getting really close to the end of a short period of bullish seasonality on crude oil from March 29th through April 14th. So we're nearing the end of a 5-wave up structure, looking for a pullback after that. And it looks like the commercials are expecting the same thing. Anything else before we sign off? Just a friendly reminder, use that to contact, can't find my website now, somewhere here. Use that contact, here we go, form at the bottom of my any page on the website. I'll go back to the main page. And if you've never subscribed before, use that contact us right there, and that will send an email directly to me to tell me you intend to subscribe and you'd like half price on that first month. I'll refund the 50% right back. So that, ladies and gentlemen, is everything for tonight. Thank you so much for joining me. I can see it's gotten very, very dark. It's in my room here. Apologize for that. I have a question. Do you cover overseas stocks? I cover the DAX, the FTSE, but I just go to weekly charts, no dailies on those. The DAX, FTSE, the Australian, Canadian, Hang Seng, Nikkei, Shanghai. Yes, so I do, but they're just weekly chart. But I do keep a count on those. Yes, and I cover those in the webinar. So for instance, I go to this webinar right here, the most recent one, and I go here to make that full screen. Markets around the globe. So there's German DAX, FTSE, Nikkei, so on and so forth. There's several more there. Australian, the Canadian TSX and the Australian All Ordinaries. For instance, there's my wave count on the Canadian stock market, looking for more upside, of course, because I'm bullish on oil as well. So I'm sorry about the darkness of my video here, but that's the way it goes. Anyway, thank you for joining me. I think we'll call it right here. We'll put the recording of this webinar up at my blog, at my site, and also you'll be able to download that sortable spreadsheet so you can look through how the algos, which algos seem to be working the best lately, It's a momentum algo, so it's kind of tells you which items have been trending the most smoothly. So have a great one. Thanks for joining. Talk later. Send me an email if you have any questions. Bye-bye.